Hi, everyone. If you're a loan officer or broker looking to grow your business, you might be wondering, should I stay focused on residential loans or is there more opportunity, especially in this market in commercial lending? So today we're going to break down the top 10 differences between residential origination and commercial loan origination. I'll share some insights, some surprising stats, and guide you on whether expanding into commercial could be the next step for your business. So let's dive in. And if you're new to this channel, I'm Megan, a 20-year industry veteran. And here on my channel, you'll learn all the things you need to grow or build your mortgage business and make more money. I talk about building a residential mortgage brokerage and expanding into commercial too. So if that sounds good to you, then make sure you subscribe and don't forget to hit the bell to be notified when my next video goes live each week. Just to give you a little bit of background, I've been 20 years in the industry, but for the first 15, I only did residential. I didn't even know that you could do commercial loans. The building I'm sitting in, I bought and went to a local bank. And then just about 3-4 years ago, I learned we can also originate commercial loans. Should be a breeze, right? A walk in the park. I learned that it really is a very different animal. It fits right into the business that you're doing, and it's absolutely doable, and you can make great money doing it, but you got to go in with the right headspace and know that there are some pretty big differences between originating these two different types of loans. So that's why today we're going to go through and just an overview of the top 10 biggest differences between residential and commercial. If you're a loan officer, just listen to the information and figure out, do I want to actually originate the loans, or would I rather just hand them off? Because in commercial, you can receive and pay a referral fee in this space. I'll leave a link down below so that you can grab the link, talk to my team. If you want to try either one of those two, we have programs that will teach you, and we also pay referrals out to loan officers who have commercial deals but aren't quite ready to learn everything yet. So let's jump into the list, starting with the first one, which is market demand. This is where residential loans have definitely seen a dip recently. And that's thanks to higher interest rates, fewer opportunities for refinances, and people just aren't buying or refinancing homes at the same rate that they were in 21 and 22. While on the flip side, commercial loans have this built-in demand cycle. So many commercial loans come with shorter fixed rate periods, and usually that's around 5 years. They can be amortized longer, but they have balloons, so they're like having an arm on almost every loan. So you always have business and clients that need financing, and borrowers are either refinancing or selling within that time frame just so they can manage their costs, and it keeps the demand in commercial lending higher and making it a more dynamic space than when residential markets cool. The second one is licensing. So in the residential space, loan officers, we have to go through our SAFE Act requirements, obtain an NMLS license, pass exams, do continuing education. We're just subject to a lot more regulation and oversight, whereas commercial lending generally doesn't have any of that. None of it. No licensing, no rules. That's why they call it the Wild Wild West. This sounds really great because it seems like it would be simple. Entry into commercial lending definitely has a much lower barrier to entry, and it gets really appealing, but it can get really confusing when every bank has a different rule and a different system that they use. So it's just something to think about if you're going to jump into doing commercial loans. The third one is fees. So payments and fees in residential lending, we can't charge anything up front as a mortgage broker outside of an appraisal or a credit report. And commissions are typically paid at closing with a set amount. We have a max we can make of 2.75. In commercial, we have a lot more freedom. You can collect fees in the beginning, deposits, even before closing. There is no regulation on how much you can charge. It's based on the banks you find and what you present to the clients. And so this flexibility allows for different fee structures and different ways that you can make money in the commercial space. And it definitely can help you with managing cash flow more effectively and doing services that you like when you start learning commercial. The fourth one is geography, right? Geography in lending is a really big thing in the residential space, and you're limited to your local state markets where you're licensed. Now, you can get other licenses that you can do loans in, but it costs money to expand, and you just have to be smart about it as a business owner and a loan officer. In commercial lending, because it's more flexible and there isn't licensing, you can operate nationwide pretty much, except for there's a few states that require a license. So if you're looking to expand beyond your local market, commercial loans really could give you the reach that you're aiming for without having to go through the costs and licenses that are required. Fifth one, competition and opportunity. I call this the blue ocean, if you've ever read that book. There really isn't as much competition in commercial. Residential lending is highly competitive, where there's a lot of loan officers vying for the same market and the same realtors. But in commercial, the landscape is less saturated with fewer brokers, fewer loan officers in this area, and the deals are larger with bigger commissions. The average commission on $1 million commercial loan really could be 3 to 4 times what you could earn on a residential loan, but they do take longer to close and they all aren't the same. And so for that reason, commercial can be really attractive if you want to grow your income and your reach. Now, the underwriting process is where residential and commercial really start getting different. Residential underwriting is strict, right? And it generally follows government guidelines, automated. You can run it through a system. Although those systems, LP and DU, can be really annoying, it also gives you frameworks to work within so you know what you can do. Things like credit scores, income ratios, personal history, and it tells you if it's approved or if it's a refer. Think of commercial as being like every loan is a refer. There is no automated systems. And so it's really up to human beings. So you don't know for sure in the beginning if you can do a deal until it gets reviewed. So there's less structure and less focus on also the personal financials of a person versus the business or the building. So it's much more of a numbers focused process. Let's talk for number 7 about third-party payments. I said a little while ago that the fees are different when it comes to being able to pay to refer deals. In residential, you cannot refer a loan to another brokerage or lender and get paid. You can only get paid at the company that your license is at. Commercial lending is more lenient and allows for third-party payments and referral partners. So if you like working with a network of people and you have a big network, learning commercial could be very lucrative by marketing to your current network. Now, number 8, the business model, that can be different in each market. Residential lending is mainly direct to consumer, where you're working with home buyers, maybe some, real estate investors. Commercial lending, I compare it to, it's like doing self-employed loans all the time. You do have to really learn how businesses are structured, how they make money, and how to move things around to get underwriters to understand the person that you're representing. Number 9 is deal size and commissions. We covered it a little bit. So when it comes to deal size and commissions, commercial lending does blow residential out of the water. Deal sizes are typically smaller in residential, whereas I think the industry average is around 350 to 400. Commercial, it's closer to $1 million. So you may earn less on a loan, or you may not make your whole 2 to 3 points. But on the bigger deals, you can pick a dollar amount. It's completely flexible. Some lenders will pay you directly, whereas in other cases, you have to charge the consumer the entire amount. Now, number 10, let's finally talk about training and resources. So residential lending does require extensive training, certs, licenses, ongoing education. NMLS makes sure that we all have our ducks in a row. Most companies you're going to go into is going to have some type of training and resources for you. In the commercial space, however, there is less formalized training, fewer resources, and it's really hard to find anything out there that will teach you how to do this the right way. But this can be an advantage if you can find the right fit, because there are some training programs. They can be pretty pricey. It's also why in the lab, which is our community where we teach loan officers how to become entrepreneurs, we teach them how to start dabbling into commercial. So if you are interested in learning about how you can get some of that education and those resources, I'll put a link down in the description, and you can meet with a member of our team to see if the lab is for you. We also have a free Facebook group. Make sure you go and join that. Overall, I think commercial is a great thing for loan officers to really start expanding their business. There's less competition, fewer formalities, and it means you can learn on the job and see a higher return on your investment, especially if you've developed a strong reputation. You just have to be ready to put the time in. And so there you have it. Those are the top 10 differences between residential and commercial loan origination. So if you're considering expanding your business and diving into commercial, this list should give you a solid foundation. So save this video so you can reference it later. And if you found it helpful, hit the like button, subscribe for more, and let's keep building your mortgage business together. Otherwise, I will see you in the next video. Thanks for watching.